Welcome and good afternoon. This is the Q2 quarterly investment briefing event focused on the theme of investment funds. And my name is Bryony Phillips. I am Scale Up Lead at Rocket Makers. I also dabble in a bit of marketing for them as well. And I run this program, the Investment Activator program with TechSpark, which is really an event that exists to ensure that our community of investors and founders are well supported and that there's an increased flow of capital coming into our region of the Southwest and Wales for that matter too. So we're very lucky to be able to run this programme, which includes these events 4 times a year and a Silicon Gorge pitch competition twice a year, amongst other things. And that's all thanks to the sponsors who you see listed at the bottom of this screen here. So if ever you need to get in touch with any of those organisations, do drop us a line and we'll happily make the introduction or tell you a little bit more about how they might be able to support you. But if you happen to be tweeting about the event today, I shan't be because it's one multitasking step too far. But the hashtag I've been using is QI Briefing. So if you want to capture any of the content and share it more widely, then feel free to do so. So here we are at the quarterly investment briefing. For those of you who are new to it, you might be wondering, what is this event I have come to? So it was founded a couple of years ago. We've been running now for about 2.5 years. And essentially the QIB is an opportunity to bring investors and what I call enablers of investment together to network, share and learn. Really, this is about increasing the flow of capital into the region and getting to a point where more investments are happening locally. And so that means that I try to encourage everyone who's here to be an active or potentially active investor or a manager of investors or somebody who's able to deploy capital, or perhaps somebody who is an enabler of investment activity, many of whom are our incubator or accelerator hub managers across the region too. We also ensure that everything that's presented, well, as far as I know anyway, is informative, fact-based and regionally relevant. So sometimes that's about inspiration, sometimes it's about learning about something that already exists in our region, but ultimately it's going to be something that furthers the conversation that we're having collectively together about investment. Speaking of conversation, there is a chat function in Hopin, and I do encourage you to use it. We're going to hear from 3 fantastic lightning speakers, more on them in a minute, today. And so if you have any questions for them, please do drop them into the chat there so that I can pass those questions on, or they can spot them directly and reply to you. Finally, the third guiding principle is that we value the opportunity to learn equally with the opportunity to share. And that's why I mentioned the chat. So normally when we do these events in person, it's an opportunity for us to be able to catch up and share war stories and successes. But sadly, that's not so easy when we do it virtually. Something I've been musing on over the last few weeks. So I do encourage you please to make connections through this platform. There'll be time for networking at the end so that we can balance out the fact that there's lots of content, but there's also lots to talk about and think about in terms of how we move forward as a region. So I thought I'd start with some positive news because that's always a good thing to do. Hopefully these are headlines that have already hit your inboxes, but just in case they haven't, you might have heard in the last week that Immersive Labs have secured $75 million in their Series C funding from Insight Partners, Menlo Ventures and City Ventures, and also with the continued involvement of Goldman Sachs Asset Management. So that brings them to a total of $123 million invested so far, with 200 people in their office and a joint HQ across Bristol and Boston, of all fantastic places. So great news for Immersive. On a slightly earlier scale, but still very positive, Ketz Quantum have managed to secure £3.1 million to help keep safe data from the next generation of quantum computing enabled hackers. So they're essentially doing quantum secured communications, and great news for them to have closed that round. And then finally there, Neighbourly, on a very different vein, less cyber and more about community, which some might say is a cyber thing, but anyway, let's not go down that rabbit hole. So Neighbourly have managed to secure £3 million in Series A funding as well, to accelerate the growth and impact of what they're doing. And just in case you're not in the know and you're interested in their proposition, they are helping businesses to make positive impact in the community by encouraging them and enabling them to donate money, volunteer time and surplus products. So good news on the founder side. but also some good news from an investment perspective as well. So you may have seen that the UK Business Angels Association announced that the Science Angel Syndicate has launched. So this is headed up by Jonathan Matlock and Ben Hunt, two local names you might recognise, and I'm yet to find out, certainly from a good ferret through their website, I haven't found that there's any kind of geographic bias in terms of their investment portfolio, but more to come on that. Perhaps you know more than I do. If you do, add it in the chat. I'd love to find out more. So some good news indeed to start with. Let's get into the meat of the event though. So today we're going to be hearing from 3 different lightning speakers: Matt Pennycard, founding partner at Ada Ventures; Matt Hicks, business analyst from Williams Advanced Engineering; and Sam Oloff, who is general partner at Science Creates Ventures. Really excited to hear from all 3 of these people for different reasons, but I hope you will be too. I think they've got lots to share. I've asked them to prepare a kind of 10-minute lightning talk, and then we'll have 5 minutes or so for questions afterwards. So I'm happy to lead those, but I'd love to propose your questions rather than mine. So please do add them in the chat, and I'll make sure to contribute those questions as well. Then I'll do a quick run through of the Bohurst data and who's raising at the moment. It's one of my favourite parts of the event, and there's lots of headlines to share. Strange movings of head offices of some of our biggest businesses as well, according to our data friends at Bohurst. So some interesting stuff there. And then we'll close off the event with an opportunity to network, so the 4-minute random connections in the networking section. So who's raised successfully? Very quickly, just to set the scene, in the last quarter, so I went back to the 1st of April this time, there are 49 companies who've raised successfully in the Southwest, so that's the wider Southwest region. Immersive Labs, who I've spoken about already, fantastic news, £55 million if you convert it in their Series C round. Across those 49 companies in total, they managed to raise 104 million. So brilliantly, it's 49 companies who raised £49 million each. Raised £1 million each. But I don't think it quite stacks up like that. And then, of course, Immersive, who added the 55 at the end. Hybrid News were news to me, so they've raised £13 million. They're based in Bristol, and that investment's come from LDC. They were incorporated in 2009, and they help people to engage with specialist audiences in higher education and technology. And then the 3rd largest raise came from Cushon, who are based in Dorset, though the press release about the raise would suggest otherwise. So I think it was UKTN who very much covered it as a London-based startup. So I'm not quite sure what the story is there in terms of their registration in Dorset, but hopefully they're having some benefits locally as well. I'd love to know more. Get in touch if you can share information. The remainder of that slide gives you a bit of a sense of the other companies who've raised more than £1 million in the last quarter, as I say, since the 1st of April. So some names that you'll recognise in there, and perhaps some new ones as well. So the conversation today, though, focuses on the theme of investment funds, which you might remember when I talked about this initially last year. At the same time last year, I always run the themes of the events concurrently each year. I talked about it being all talk. There seem to be lots of people having conversations about starting funds based in the west of England and the wider southwest, and less of it translating into action. But I'm glad to say that that seems to have changed in the last 12 months, so which is significant and positive news. So you'll remember I talked about various funds, including UE's Digital Innovation Fund. That's expanded in the last 12 months. They now do more funding through Scale Up for Growth and their Innovation for Growth programmes. I talked about the Bristol and Bath Regional Capital and the impact fund that they have to deploy over the next, I think it's another 2 years they've got left with that. So some really great activity happening. And then we saw 2 additional pieces of news hit the headlines in late last year. So Newable Ventures announced that they had secured £10 million from the British Business Bank Investments arm, and they were going to be deploying that alongside Bristol Private Equity Club, who are one of our most voracious investors locally at the moment. So that's really good news. Focused on the wider southwest and generally locations outside of London, but they're hopeful to deploy a good percentage of that capital in our region. So certainly one to watch. And then Science Creates Ventures, of course, announced their new fund of £15 million for early stage investments, which is what we will hear more about from Sam later when he gives us a quick lightning tour, I imagine, of all that Science Creates Ventures are doing. So two really fantastic headlines to see. And as is always the case, there's a couple of others that I can't quite share, but there's certainly conversations happening locally about other funds that may appear in time. So that brings us to our first lightning speaker, Matt, and I will hand over the mic to you, Matt Pennycard, who I'm really pleased to welcome to our quarterly investment briefing event today. For a variety of reasons, as I said, Ada Ventures are doing some really phenomenal work, particularly when it comes to supporting underrepresented founders in underrepresented sectors. He also lives locally, for those of you who don't know. He's a local chap, so he has a connection to the Southwest, and has done a lot of work around the world in the world of investment, so has been a real source of insight and information and learning for me, both in terms of your attitude, Matt, to work, but also the fantastic way in which you're kind of so generous in sharing your story as well. So I'm really grateful to you for joining us today, and I will hand over the mic and move to your slides.
Amazing. Thanks, Bryony. Yeah, so just to very briefly, Bryony's right. I live in the Chew Valley, which is, for those of you who don't know, sort of south of Bristol. I went to school in Bristol. I then ran off to America for a long time and learned venture capital in Silicon Valley, or learned as much as I could do. And I've ended up coming back to the UK and living, as I say, near Bristol, with my wife and kids and all that sort of good stuff. Kids are at school in Bristol. So very, very dear to my heart is the Southwest. We've got a little house down in Devon as well, so keeping the Southwest theme going as much as I possibly can. Desperate to invest in more companies in the region, really desperate. So yeah, that's me. And I'm Matt at adaventures.com. If you want to hit me up on anything, we've raised a fund. It was a huge slog. As Bryony said, we've been very open about that journey, but I've heard that some people are interested in raising funds. And if you want, I'm really happy to share kind of mostly the mistakes that we made and don't want to make again and wouldn't want other people to make. So there's videos on our website. Equally, you can hit me up and I'm happy to talk to you personally about that if that's useful, which it may or may not be. So let's roll forward, should we, Bryony? I can't control this, can I? No, sorry. So this is Ada Ventures. We find extraordinary talent. Obviously, that's what VCs are trying to do, but we are looking in places that other people are not looking. And that's just because we've kind of looked at VC and the model of pattern matching and decided that's not really representative of where society is heading. And so we've built a fund a little bit more around where we believe society might be heading. And that leads us to investing into much more diverse founders and people that wouldn't historically have been necessarily backed by venture capital, institutional venture capital. And it's all about returns for our investors. So we have a very large scout network, which Bryony is actually a part of. So if you want to roll forward, Bryony, to the next slide. If you do, that scout network is huge. It's the biggest in the world, we believe. It's very diverse. It's focused on leaders of communities is who those scouts are. And they help us to make good on that claim about looking in places other people are not. Because Ada Ventures is just two, we've just hired somebody else, but it's just two founding partners. We're equal partners. We run the business together, make the decisions together. And the way that we leverage ourselves principally is this scout network, which I'll talk a bit more about as the lightning strikes in this presentation. But if you have a investment that you think might be a good fit with Ada, we try to be quite explicit about that on our website. You can either bring it to me, Matt at adaventures.com, or if you want to be really kind to Bryony, take it to Bryony, and then it becomes a scout deal, or a deal that Bryony originated, and then Bryony benefits from that if we end up investing in the company. So actually do that. Okay, so let's keep rolling through this. So this is Ada. It's myself and Czech. We founded the business a couple of years ago and raised a fund, which I'll tell you about. I'm an odd chap in many ways, but certainly career-wise, all I've ever done is private capital, private company investing. Tried my hand at private equity, which I wasn't great at, and have spent the last sort of 10 or 15 years or so in venture capital, mostly in the US, and then I guess now about 50-50 actually. Came back to the UK 6 or 7 years ago, that's us. That's our background. So quick summary. This is like showing you under the hood. Fund 1, Ada Ventures 1 is 38 million pounds in size. It's performing very well at the moment, but frankly, we're not looking for hero status for that. It's quite easy to perform well at the moment. Tech is doing extremely well. There's massive amounts more liquidity in the bigger funds above us, and so funds like ours are getting markups quite easily, is what I would say. 60% of the founders in our portfolio, we've invested in 15 companies so far out of this fund. So I should say we started investing in January of 2020. So we're 18 months in almost, and we're invested in 15 companies. So we're investing quite rapidly, about a company a month, I would say. And 60% of the founders in our portfolio are female founders, which is something that our fund is set up to do. Not exclusively, we're funding the best founders, but we're just very open to who they might be. So let's keep rolling forward at pace. I'm really hoping that you're going to want to ask questions and make this kind of more interactive and interesting for you guys. It's not just about, I don't want to just talk at you, but this is our view on the world. This is our view on really that's informed our venture capital fund. It's a venture capital fund that's trying to be fit for purpose for the society in which we're quite rapidly changing into. It's not looking backwards, it's very much looking forward. So this is a kind of our view, our philosophy. There are paradigm shifts. You can all feel society changing quite significantly all around all of us. That's a really exciting thing. That's really fun to be involved in. But that also means that some of the kind of structural systems like venture capital are going to have to change to better serve ultimately the investors in those funds and the founders that we're in service to. So if you look at some of these kind of historical situations down the left, and these are the changes that we've identified that we're excited about because they will lead to quite significant value creation. That's really what we as a VC funder in business to capture. So let's keep rolling forward, Bryony. Sorry to keep saying that to you, Bryony. I wish I could click. I don't mean to be so So for information, taking you deep into what do we actually do and what kind of deals are we interested in, those of you that are involved in the kind of, the deal sourcing community, tangentially or directly, these are the two sort of checks that Ada as a fund will write. We call them pre-seed and seed, but there are apparently 11 different seed checks or rounds that can be done these days. It's quite unhelpful. We do anything pre-series A, but again, how helpful is that? Not wildly. So these are kind of broadly speaking, two investments that we sort of like to make. Mostly on the left, the pre-seed checks. So that's really, I call that post-product pre-traction. Okay, that's a really good description of what Ada has been set up to do. That's the product that we're trying to for founders. So you've built an MVP or a version 1, or you've left your job, so you're actually doing it. So we're not an idea stage fund, we're not a pitch deck stage fund, but you don't have any traction yet potentially, or maybe very early traction. That's what this round here is for, this pre-seed round. That's typically a 500, 600, 700K round. It can be bigger these days, but typically it's 500K. We'll end up leading those rounds. We don't have to, but we end up doing that because despite what most VC funds, there are very few funds that actually do this. And if any of you are thinking about raising funds, I really encourage you to think about pre-seed as a great strategy at the moment. It's not competitive. It's very collaborative. It's really nice working with the other small number of funds that do this and do it well. We co-invest with Sam's fund, who we're going to hear about later. Love to look at stuff with Matt's fund. So it's much more collaborative, right? As you step up into the second check, right, the seed round, that's becoming much more competitive and fought over, and prices are going up. And whilst that's fun for founders, it's less fun for VCs trying to do a good job with, it's not my money, it's my investors' money, and I'm trying to do the best deals that I can do, and that's making that harder. That's because US funds are coming to the UK very aggressively. We've benefited from some of that in Bristol, as Bryony's been talking about, and that's great in one respect. But typically those seed checks that we write are more often than not going to be follow-on checks into our performing pre-seed funds. Not exclusively, and we've done actually a bunch of seed check first investments in this fund. But lightning speed, that's roughly kind of how we invest. We invested in a great Bristol success story called Habu, which actually was introduced to me by an angel investing friend of mine in Bath. And we were the first investors in it. We took it to episode 1 because we didn't have a fund at the time, and they funded it alongside us. And we did a pre-fund SPV investment into the company, and we followed it all the way through. And we invested, the fund is now the biggest investment in our fund. We invested into the Series A. We helped them raise their Series A. And Martin is a very nice person and a big fan of ours. I don't think because we're particularly amazing, but I think because we funded him and helped them find other funding, and that company has taken off like a rocket ship, and you should watch this space with what's happening with that business. But we are particularly proud of it, not just because it's performing so well, but because it is a Bristol-based company and the founders live in Bath. And again, super proud, want to do much more of that. So with your help, hopefully we can find more Haboos out there, which we first came into it when they had no revenue at all, and they were a little start. There was an experiment in a storage unit in Bath, basically. Okay, let's keep cracking through. So this is our scouting network. We very badly don't have a picture of Bryony, but we could have had a picture of Bryony there, which we should do. We've got almost 100 scouts now around the UK. And 99% of them are in the 95% of them around the UK, and they are leaders of communities, very much like Bryony. And so we pay them if they bring us a deal. We pay them a cash fee, and we give them a share of the carried interest. That's the profit on the fund relating to that investment, that if we make it. So it's a really fair model. It's really equitable, and it allows us as a tiny business of 2 people to scale what we do pretty massively. We can roll through this. It's probably a little bit too much detail, but you might be able to tell that I'm raising a second fund, or I'm thinking about raising a second fund potentially, which where a lot of this material comes from. Our LPs are amazing. They're global. They're all around the world. They are the massive funds, big institutions. Our biggest investor is the British Business Bank, who are amazing as a partner if you're thinking about raising capital, at least a sort of £30 million fund in size. The BBB has just been an amazing partner to us. Incredible people to work with, brilliant structure, encouraging LP, so limited partner fund investment in the UK, in a society and a culture that doesn't really do that very much. And that's been a real challenge. Again, something I'm super happy to dive into people if they're interested in that in more detail. But yeah, we've got a phenomenal group of investors from all around the world that we're mega happy with and we love working with. So yeah, we've also got this is effectively our board. It's not technically a board, but they're global. They're in our carried interest, so they're genuinely partners in our fund. They're investors in our fund. We've known them all for years, and they bring different aspects of kind of governance, really, and accountability to myself and Czech. So we handpicked them. Last slide. So some companies that you may or may not know. But Organise is a kind of like a digital trade union. It's like a workers' information and workers' rights anonymous social network. Fascinating company. I've never seen a company like it. Haboo, hopefully some of you know, e-commerce and fulfillment logistics software. Ticker is an impact investing app for consumers. Spill is a mental health technology for scale-up companies who don't have the resources to have kind of HR training management and mental health management at work. So it's all integrated, all done through Slack. Bubble is a childcare marketplace. Oxford Medical Products is an obesity medical device out of Oxford, funnily enough. And Osu is a micropayments mobile application for micro businesses. We've invested in 15 companies in the portfolio so far. We'll do another 15 out of this fund, and next year we'll be live with another fund that will look very similar to this one. And that is us in a lightning speed. And thank you for listening and for your time. And I'm happy to take any questions that you may or may not have.
Fab, thank you so much, Matt. That was a brilliant canter. I think you did it in dead on 10 minutes as well. So you set a high bar for our other lightning speakers this afternoon. So yes, I'm not seeing a flood of questions as I predicted, which is kind of disappointing because, as we said, this is all about building community. But I do have a few questions for you, and I'd love to kind of pick your brains a little bit. So the first one's a broad one and perhaps tricky to answer, but I'd just be interested in what pops into your head. As someone who's been kind of in and out of the Bristol and Bath and kind of wider Southwest investment ecosystem, it's obviously developed a lot over the last 5-10 years, but it still feels a little bit immature, or it's got work to do, particularly when it comes to the diversity of founders and teams that are coming out of the region. And I'm just interested, kind of total open question really, as to what your observations are about that and in what we're getting right and what we're getting wrong, really.
I think that Bristol, I mean, again, like shooting from the hip, which I love to do, and I'm very happy to be criticised for anything that I say. But I think that Bristol needs more branding about what it stands for. And I think Sam's fund is just starting that right now. And that's a big shout out to Science Creators Venture. I think they're doing it in their area of like deep science, tech. I think I wish that the robotics lab had done more about that, like with Joel and Sammy's company, Open Bionics. I think there could have been a real opportunity to say we are the global centre for robotics technology startups. I think Bristol is a series of communities that are not that brought together, and Bristol, and I suppose we're talking about the wider Southwest as a whole, aren't we? But Bristol's, you know, kind of where I spend my time, I guess. And I think that's an issue. I think there's no. I've tried to say to Matt Clifford, like, let's have Entrepreneur First in Bristol. Like, if we just need more things coming together, if we could just get together and figure out what Bristol stood for, or Bristol in the wider area as a startup centre, and we just push that with marketing out into the world, not just around the UK or anything like that, or challenging London in a bit of a kind of like rock throwing way, because that's not what it's about anymore. And I think that's a huge opportunity that we're currently missing, because if you think about why people come to the Southwest, right, there's all sorts of amazing reasons that are well publicised. Why don't we make any more of that? Only because we're all running around in bars and meetings talking about this stuff, as you said earlier. We're not doing the doing, and I'm very much criticizing myself about that as well. But I would be so up for that if someone was like, look, let's just do this properly. Let's just get marketing behind it. Let's all put some money and time into it, and figure out with experts, like, you know, not us, but let's get a branding agency in, right? And I would love to go big on the Southwest. I think that we're probably a little bit siloed as communities, and so we don't talk to each other, and we're probably just not friendly enough like that. We're like, oh, you're in this, you're in London, you're this club, you're this community. That's not really how tech works at all. It's certainly not the way Silicon Valley works. And the beauty of Silicon Valley is the network effect is at full play. So we don't do that well enough, but the talent is phenomenal. The people are great. The lifestyle is brilliant. It is changing quite radically before our eyes. The diversity is nothing specific about our area. That's an issue basically across the whole of the UK, and so I wouldn't allow us to be overly criticised about that. And again, that's not something that, as a fund, I run a very inclusive fund, a fund that, you know, as you've seen, like, you know, and that's a strategy and a philosophy and an arbitrage and all those things. And I've done deep training in, you know, prejudice and privilege and those things to understand those issues properly. I'm a privileged white male. I went to a private school in Bristol, you know, but I know what my place is in that. It's certainly not to throw rocks and to be superior. And it is absolutely. But it's just a journey, and I think Bristol and the Southwest is on that journey, and that's great. We're making great progress, and I wouldn't be overly critical about that at all. You know, we've all got work to do, and we'll just continue to do that.
Yeah, and I think there is something in the kind of two last points you made around the kind of siloing and the network effect. You know, there's each different corner of individuals and organizations kind of shouting for the creative or the science or the whatever it might be, or the robotics. And actually, you know, if we bring our power together, we can have much more of an impact. So it's an interesting one, and I think that would probably have a positive impact on the diversity of the types of different organisations and individuals who wanted to get involved too. I'm going to turn to Ben and Rosie's questions quickly, which have just popped up in the chat. So Ben would love to know whether or not Ada's focus on inclusion has given you an advantage and differentiates you from other funds.
Yeah, great question. Two ways I'd answer that. One is in fundraising and one is in investing. In fundraising, we raised the fund basically during 2019. We closed it November the 29th, 2019. And back then, most of the money has come from, apart from the BBB, has come from outside of the UK. I think almost all of it really has come from outside the UK, apart from the BBB. And that's partly because there isn't a huge appetite for the perceived risk return of a venture fund in the UK, although that's changing, thankfully. But it's also because the inclusive nature of what we were doing just wasn't really on the radar back then. And people had very strange reactions to it. Investors said things to me like, you know, prove to me women can make money as well as men and things like that. And that's okay, that's funny. And none of us on this call would agree with things like that. But I heard all those things. And that's funny, actually. It kind of helped me because people were like very quickly in the no bucket. And that was useful while we were fundraising. I think now there's an awful lot of, so I think Ada was the first, not through any greatness on mine and Check's part. We just happened to have the privilege of being in that situation as two people. We're nowhere near the last, and people will come through and we will support them and they will become bigger and better than Ada. But there are lots of, you know, founders of color focused funds now, female founder focused funds, et cetera, which is great for the community of entrepreneurs that we're all in service to. So I think it did help us in fundraising, because the investors that were interested in that view on the world very quickly got interested in investing in the fund, and we were the only fund probably in Europe offering that kind of product to those investors. So it massively helped. It'll be different for Fund 2 because I think it's less scarce. In investing, it's a real advantage because founders seek us out in a way that I've never seen in VC. So people write essays, make videos for us. They say Ada is the only thing I found that speaks to me. So we get much more in the top of the funnel because of that. Which is obviously, if we've got a good process, that could lead to better outcomes. And I think, frankly, also speaking very bluntly, it's helped on price, on valuation. And if you look at the valuation stat, for example, female founders get received for their companies, they're lower than their male counterparts. And the reason for that is because there just isn't, if you look at the data, there just isn't the demand, right? And that's something that Ada is not kind of greedily exploiting, but it is an advantage. We're not competing necessarily to the same extent. Therefore, demand and supply crosses in a different place, and therefore the price is different. So yes, I would say is the answer to those two. But again, love talking about it. We'll go into it in any more detail if Ben wants to do that.
Great, thank you. And I'm going to have to ask you to take this last one efficiently, please. So Rosie's asked a couple of questions. She's asked, are you happy to co-invest with individual angels and or syndicates?
100% love it. They bring more value than a VC fund does in most cases. So absolutely love it and always accommodate that and more than support it, yeah.
Ace. And then her follow-up is, do you extend the principles of your own fund when you co-invest, i.e. to other funds or individuals?
What a great question. We don't technically. I'm breaking one of my own rules today, which is, I guess it's not really a panel, is it? It's difficult with this, but I only ever go on gender balanced panels. Yeah. But no, we don't actually. And that is a great idea and question. We do on the companies. So one of the things we do is we work with our portfolio companies on D&I policies. We bring that kind of expertise and ESG. But in terms of our co-investors, we don't. And I think it would be a limiting factor if we did. We need the capital from those co-investors, but it's a brilliant thing to think about in the future.
Yeah, absolutely. Great stuff. Thank you so much for, as always, being generous with your time and your transparency and openness in sharing your story. It's super helpful. And for anyone interested, Matt has, of course, given you his contact details. But I also implore you to look at the blog because they're telling the story really openly there too. So thanks so much, Matt. And hopefully you'll see a few people in the networking later, but I will catch you later. Great stuff. So our second lightning speaker, without further ado, we'll move straight on to Matt Hicks, who joins us from Williams Advanced Engineering and specifically the Foresight Fund. Really pleased to have you here, Matt. I know you've stepped into the breach as I moved the date of the event, which scuppered our original plans. So I'm really grateful to you for stepping up and taking on the presentation today and sharing a little behind the scenes information about Williams and what you're doing there and the investments you've made, particularly the local ones, of course, but all the others too. So I learnt very little about you in my avid stalking this morning, other than that you are an avid skier, which sounds like something we should talk about over a glass of wine sometime. But probably no time for that. So I'll just hand over the mic to you and switch on your slides.
Excellent. Thank you very much, Brian. I'd be very happy to have a chat about skiing. Matt, thank you again. That was really interesting and great to hear what Ada's doing. So afternoon, everyone. My name's Matt Hicks. I work at Williams Advanced Engineering and also part of the Foresight Williams Technology Fund investment team. So in the next 10 minutes or so, I'm going to give you a short overview about the Foresight Williams Fund, give you a little bit of information about our investment scope, and also have a look chat through our portfolio. So next slide, please. Yeah, so the Foresight Williams Fund, or FWT for short, was first set up in 2016. And it's a joint venture between Williams Advanced Engineering and Foresight Group. So Foresight Group are the fund manager. They're based up at the Shard, and they have a number of different private equity funds, of which the FWT fund is one. And WAE, or Williams Advanced Engineering, is the engineering partner for the fund. So we provide some of the technical expertise to help us select the best companies and also work with those companies post-investment. So Sorry, still going. The FWT fund comprises both an EIS and a VCT fund. So we made our first investment from the EIS fund in 2017, and we've been investing from the VCT since 2020. So typically we invest in UK-based, disruptive, early-stage hardware and industrial software companies. And the real aim of our fund is to try and leverage the expertise that we've got within WAE and provide those to support our portfolio companies. So that can be things like technical, commercial, and promotional support. And I'll chat a bit more about that later on. So next slide, please. So as I say, Foresight itself is the fund manager. They've been around since 1984, and they are quite heavy infrastructure investors. They have 6.8 billion assets under management, and they have a global presence around the world. As I say, they've invested in around 300 infrastructure projects, and all those projects themselves can produce 2.7 gigawatts of clean energy. So there's definitely a sustainability focus to both Foresight and the Foresight Williams Fund as well. So Foresight itself has around 100 SMEs within its portfolio, and as I say, a range of private equity funds, of which the Foresight Williams Fund is one. Next, please, Ryan. So as I say, I work at Williams Advanced Engineering. WAE for short was spun out of the Williams Formula One team in 2010. And the aim being to leverage the decades of Formula One expertise that we have or have within Williams and apply this into different engineering challenges and try and solve some of the most challenging engineering challenges that we face at the moment. So we offer a range of technical innovation, engineering and manufacturing services to our customers across the automotive, motorsport, aerospace and defence sectors, to name a few. So we have around 300 staff, and we're based at the Williams F1 campus at Grove. We have relatively recently, I think 2019, received external investment. So we are now an independent company, but Williams F1 is still a minority shareholder. So next, please, Ryan. So I wanted to talk a little bit about our core competencies that we have within WA and some of these competencies that we can use and leverage to support our portfolio companies. So a few examples of these are things like electrification and battery technologies, aerodynamic and thermodynamic engineering, computational fluid dynamics, things like industrial design, and advanced manufacturing and assembly. So I thought I'd list a few of the projects that WA has been involved with in the last 10 years or so. So as you can see from the bottom, we're involved in Formula E. So we were a key player in the formation of the Formula E race series. And for those that don't know, it's the all-electric race series. And we designed and provided the batteries for the first 4 seasons. And we also currently run the Jaguar Formula E team out of Grove. So we've also designed the high-performance electrical battery and power chain for you may have seen the recently launched Extreme E race series. And we regularly work with automotive manufacturers in the design and development of their electric powertrains. And the competencies that are on this screen and the competencies I mentioned earlier are all things that we look to try and provide to our companies and support them as they grow. Next, please. So as I mentioned before, the aim of the Foresight Williams Fund is to invest in early stage hardware and industrial software companies across the UK, where we can leverage WA's technical, commercial and promotional support to provide an advantage to those companies. So that sort of synergy with Williams Advanced Engineering is a big part of our investment scope. So we really need to see a way that we can support those companies, either from a technical point of view or a commercial point of view. So the company could be working in a similar market, or we could be able to support that and sort of help with a particular engineering challenge they may be facing. So typically our investee companies will have disruptive and defensible technology, and usually in the form of patents and other strong IP. And we typically only invest in companies with a strong management team. So this needs to be obviously a technically oriented team, but also a team that we feel that we can work with post investment. So as part of our investments, we typically look to take a board seat or have some sort of board involvement. So this needs to be a team that we feel that we can work with over the life of the investment. And we're also looking for companies with a large obtainable market. So we typically invest at the lower end, about 500k, and the upper end of our first investments typically around 2.5 million. And I'd say probably mean check size is between sort of 1 to 1.5 million in those companies. And as I'll mention later on, we do typically look to follow our money into companies. So we look to hold investments for say 5 to 7 years. Next, please. So the next slide brings up a few of our portfolio companies, and a few of these names hopefully you'll recognise from as being local investments, and we can chat about those later on. But to date, we've invested 40 million in 23 companies. We are very much a sector agnostic fund, so we're not picky about the sector we invest in, although as I say, there needs to be that link with WA. So just to pull out a few examples of companies. So the first company we invested in was Eutonomy, and we first invested in them in 2017. And they've developed technology to remotely monitor the pressure within gas networks and also be able to amend the gas networks based on the findings of their technology. Another example that would be good to mention is Innovo. So they've developed a low-cost collaborative robot for SME manufacturing. So the idea for this is that being low-cost and adaptable, it opens up robotics to and automation to a much wider range of businesses. Another example is a software example, actually, is a company called Masters of Pi. So they've developed an AR/VR tool for engineering design collaboration, so allowing multiple engineers to work on a particular CAD drawing as they're developing a particular product or part. And then the last example I mentioned is, for now anyway, is an Oxford University spin-out called Machine Discovery. So this is another software play that has developed AI for speeding up simulation software. So we've recently actually closed another couple of investments. So I think that number should be 25, which we will be announcing in the next few weeks, which is exciting. As you can see from the portfolio, we do look to follow our money and have followed our money into a couple of companies, particularly the earlier ones, to continue supporting them as they grow. Next slide, please. So to finish, I thought I'd pull out a few examples of companies in slightly more detail to give you, I suppose, an understanding of what we look for in those companies, why we think they're great companies to be backing, and also the work that WA has done with those companies. So the first of these is a company called Refine. So they are an Oxford University spin-out. They were founded in 2018, and they've invented a new way of analysing molecules, such as proteins, using a method called light photometry. So I won't pretend to be an expert in the space, but it's determining what's in a sample using light to essentially weigh the particles in that sample. So their method, essentially, they've created an instrument that allows this analysis to be done 10 times faster than existing methods and much cheaper, which has solved a sort of fundamental challenge within the life sciences industry. And it's backed by 10 years of research and IP generation at the university. So one of the main things we saw as well is that the team had a very good world-leading scientific background, but also had combined that with a group of experienced industry veterans. So we invested in 2019, and in the last 18 months, the company's continued to grow very well. It attracted a large North American biotech investor, and we invested alongside those in a follow-on round. And we see really strong potential for further growth. So in terms of WA support, so we supported Refine. So they approached us prior to an industry conference to improve the styling and the design of their device. And I think it was at the stage, it was very much a prototype. So WA helped leverage our industrial design expertise to design the casing that you can see on the screen there. And that's still in use today. Next slide, please. And the last company I wanted to mention was AMT. So AMT, or Additive Manufacturing Technologies, was built on IP generated at Sheffield University. So AMT has developed post-processing systems for 3D printing. So for those of you who don't know, post-processing is essentially the art of getting the part ready once a 3D printer is completed. So that involves usually things like sanding down and polishing down a part to make it ready for sort of the end use. The problem here is that 30% of the cost of 3D printed parts is in this post-processing, and it's very much a slow, can be manual and a relatively inconsistent process. So what AMT has done is they've developed devices that can automate this post-processing. And what we think is that this being able to do this post-processing consistently and quickly helps enable the long-awaited industrialization of 3D printing. So AMT has shown strong growth since we first invested, and we also followed our money into the company and provided a follow-on investment in October 2020. And in terms of Williams Advanced Engineering support, we have provided introductions to several industry partners that we had, so both customers of WA, and also provided a route into Williams Formula One. So I think that's next slide, please, Bryony. So that's everything I wanted to talk about today. If you've got any questions, please do either mention them in the chat now, or please do get in touch. My email is matthew.hicks@wae.com. And you can also find me on LinkedIn if you want to follow up after this. But thanks very much for listening. Please do shout if you've got any questions.
Great. Thanks so much, Matt. Really helpful little canter through there. I think you hit 11 minutes, so everyone's getting prizes today. And so interesting to hear the kind of behind the scenes a little bit in terms of your portfolio, but also how the two parties work together to make the fund a success. I'm interested to know a bit more about the kind of pipeline and how much of that comes through WAE connections versus Foresight connections, and kind of how does that work?
Yeah, good question. So it's a relatively even mix. So the nice thing is about having the two different groups. So the Williams side of the fund, we typically leverage a lot of the university tech transfer offices. So we have a relationship with a load of TTOs, incubators and accelerators that we get involved with, and usually deals referred through them. I think on the Foresight side, we typically get introductions from things like, well, actually the wider PE team. So as I mentioned, the Foresight Williams Fund is one of many other PE funds that the Foresight do have. So actually referrals from them where there's a Williams angle is particularly helpful. And also some of the financial advisors network the Foresight has to bring companies into the FWT funnel.
Sure, makes sense. Great. And is there ever an occasion when a company would approach WAE for help with some of those fantastic services that you described, and that you might then propose an investment, or that kind of evolves as a relationship?
Yeah, exactly. And again, it can come in a few different ways. So I suppose we don't directly approach companies with WA in mind. So the Williams Advanced Engineering would never be an acquirer of any of our companies, I wouldn't have thought. But there are scenarios where we are sort of referred companies by the wider sort of engineering team at Williams Advanced Engineering who are working with a company in a particular technology and some of the projects that WA are doing. They then get referred to the ventures team where I sit, and that can bring companies into our portfolio, which is exciting. I suppose there's also another route back. So we actually have a portfolio team whose role is to work with the portfolio companies post-investment and bring in that engineering expertise that we've got and understand where we can support those companies. But there's also, if for example, a company may be perhaps too early or not quite right for a Foresight Williams investment, there is a route back into working with WAE who could end up being a customer if it's of relevance to the business.
Great. Okay, perfect. One follow-on question from me then, just quickly. It's great to see Rovco and InSphere and Open Bionics there on your portfolio list. Fabo, very excited about that. How do we increase the number of, or the proportion of Southwest-based businesses that are on that list? Is there anything that this community can do to better support you guys?
Yeah, absolutely. And it is. I say Bristol in the Southwest, I think thinking about our sort of territory map is about, I think it's the third most prolific in terms of where companies have come from and investments have come from, which is great. I think we're very keen to reach out with some of the local funds. It's great to see, and I know we've worked with Science Creates in the past, and great to hear from Matt as well. So I think there's a piece there about working with other funds and co-investing with other funds. I think some of the local incubator networks and accelerators, and again, we're very keen to hear about any companies that, from what you've learned today, that may fit with FWT.
Great, perfect. Well, as our regulars will know, I circulate a blog and newsletter after the event, which includes a link to our platform where you can find out about those 13 companies that are currently raising at the moment, that I know of anyway. I'm sure there's lots more that people on this call will know about too, so I'm sure they'll be in touch if they think they might be relevant. But kind of it's with me just to say a huge thank you to you for a really interesting presentation, and do stick around if you'd like to join us for the networking at the end of the event.
Will do. Thank you very much.
Perfect. Lovely. So last but not least, Sam, it's fab to have you here. I think we first met when we were both panelists on an event on a very different platform. So we're making ourselves au fait with these different technologies, which seems to be a successful test, which is all good. Before I introduce you, I want to apologise to Dom and Jake, who very diligently put their questions in the Q&A section of the chat that I only just found once Matt had left the stage. So apologies to you both, but if you want to share those questions, then please do get in touch with Matt. He was matt@adaventures.com, and I know he'll be more than happy to share answers to those, I'm sure. So let's move on. Sam, welcome to the Quarterly Investment Briefing. You are, of course, general partner, one of two general partners at Science Creates Ventures. I loved doing my due diligence this morning and discovering your deeply scientific background, which somewhat blew my mind, not least being Director of Tech at OxSciBio, which is a spin out from the University of Oxford, but now doing some fantastic work deploying capital across our region and others within the deep tech sphere. So I'll let you tell everyone a bit more about it.
Oh, thank you so much, Bryony. It's a real pleasure to be here today and talk a bit about Science Creates Ventures and our role in supporting the Bristol ecosystem. At the risk of being a bit corny, I would like to just take a moment to thank Ada Ventures and Foresight Williams, both of whom we've worked with. And I think when Matt sort of talked earlier about his willingness to help and coach, I think he and Czech are particularly helpful to new fund managers and people moving into the sector. And I would encourage you to reach out to them if there's anyone on the call who's wanting to know more about that. So if we could jump onto the next slide, please, Bryony. I'll just flash a brief disclaimer as I'm sort of obliged to do thanks to compliance, and then jump straight into giving a bit of context about Science Creates as a brand. And effectively, Harry, my co-founder's vision for Bristol was to create some really clear signposting, as Matt from Ada had talked about, to guide founders, scientists, and potential partners towards a sort of family of companies that are aimed to support technically focused startups. And so we've got Science Creates incubators, Unit DX. Many of you already know Ash, Charlie, and the team there. They support 150 people and provide 16 labs and service facilities for a range of Bristol startups. And actually, as someone who spent 9 years in Bristol, moved to Oxford and then has come back, to see that incredible growth just blew my mind. I'm here talking today about Science Creates Ventures and our role bringing specialist capital into the sector. And then in the coming weeks, months and years, we'll be starting to talk a bit more about Science Creates Network and how we formalise and professionalise the mentorship, angels and technical experts within the sort of broad umbrella. So we think there's three key elements to success. It is funding, mentorship, and purpose-built facilities, and this is our sort of flag in the ground of trying to lead by example. So if we could jump onto the next slide, I'll talk a little bit more specifically about Science Creates Ventures and what we're doing. So we're a UK-focused EIS fund. We raised over 14 million. As any of you in finance will know, the vagaries of that means that there's actually a sort of an upper cap on the fund, which means that we're somewhere between 14 and 15. We started raising last year, closed in December, and we're aiming to drive highly competitive returns for our investors by leveraging our backgrounds, networks, and also investing our own money alongside that of our investors. And our sort of focus as a fund is to really champion scientists and technologies. Generally speaking, if I'm asked to pitch in line, if it's too complicated or too early, that's normally when we're interested in having a look. And we're also aiming to create a more technically conversant leadership of small companies in the UK. So if we can take scientists and give them the rudiments of good business practice, I think it will be a huge gain to UK PLC. So generally speaking, we operate in the pre-seed space, as Matt has talked about, which is a very collaborative place to work. We write check sizes from 250,000 up to about 500, and then 500 up to about 1.25 million. And I think one of our other rules is that we'll always syndicate when we're building those rounds. We like to work with other funds, angels, family offices, because we have all been founders. I'll talk a bit about our backgrounds, but making sure that you've got a diversity of capital, I think is really important. And we'll work with anyone once. You know, that's our aim in the sector, is to try and work with everyone once as we do more laps around Bristol and the broader UK ecosystem. So we've got two investments that are currently in the public domain. Cytoseq, which we led 3.5 million into their tools for the immuno-oncology market, which we're really delighted. Carolyn Porter and Adam Perryman leading a fantastic team of scientists there. And Carbometrics, which we announced as our second deal, which was bringing new chemistry approaches to glucose binding and diagnostics, and that was part of the team that was behind the Xylo technology. So if you could jump onto the next slide. I think it's already been covered by both of the Matthews, but just to sort of wheel out the Leila Jana quote that, you know, talent is evenly distributed and opportunity is not. I think it was a source of sort of upset to me that I had to leave Bristol. I was there for 9 years, and I think The UK has had a strong focus on the Oxford, Cambridge, London triangle, which gets talked about a lot. And so I think part of this new wave of sort of investor interest is focused on geographies that have previously been neglected. And I think the Southwest and Bristol is a fantastic example of somewhere that has excellent universities, Russell Group universities, a high degree of talented individuals that would like to stay in the area or even move to the area. And so that's something we're really passionate about. And I think not only our team, all of whom has some connection to Bristol, whether it was living here, studying, a lot of our investors actually have some connection to Bristol or the broader Southwest that has encouraged them to invest. So our aim is to help sort of level the playing field a little bit more so that where a discovery is made, it starts to have less of an impact on whether it's successfully commercialized and increase that opportunity. So I'm going to talk a little bit about deep technologies. As we're a specialist fund, we look at high-tech companies. So if we can jump onto the next slide, I'll just talk briefly about what I mean by that. There's some excellent resources I'll sort of direct you to. Effectively, what is deep tech and why should you care? It was a terminology that sort of appeared around 2015, and it was a collective term for the overlap between life sciences, novel materials, machine learning, and automation. And I would suggest that Boston Consulting Group's article, Dawn of the Deep Tech Ecosystem, is actually a great place to start if you'd like a sort of primer on that. And it's a fascinating emerging sector. I doubt we can even really call it an emerging sector. We had 15 billion invested into UK tech last year, and deep tech alone has grown by 17%. So I think whereas 10 years ago it was edge cases, we had companies like Oxford Nanopore combining life sciences with silicon technologies. I think increasingly we heard Refine talked about spun out of the Oxford Chemistry Department using advanced light microscopy techniques to characterize proteins in situ. I mean, part of that has been driven by the falling costs of automation sequencing. And generally speaking, if scientists can do something faster, cheaper, and better, they will. And so that adoption is what's been driving the deep tech market. And so, Brian, if we skip on, I'll just make a brief comment about the market. So, whereas about a decade ago, you would sort of struggle to get people to understand how life sciences and software automation might be compatible, now I think it's the lead if you're not using some degree of technology, information sciences to leverage your bench work. It's more of a question as to why. And I think the reason it's interesting is because it does create an unfair advantage. It enables us to do far more with far less. I saw firsthand in my previous life, even with tangible examples like 3D printers. In 2014, you couldn't pick up a 3D printer for less than about £250,000, and by 2018, we were able to build them for about 10,000. So I think those falling costs are real. And that means that with relatively modest investments into deep tech, we can actually achieve quite a lot with the money relative to where we were a decade ago. And I think as a team, our backgrounds span life sciences all the way through to software companies. And so we think we've got the strongest possible group of people to start to look for good opportunities in deep technology. If we jump into the next slide, Brownie. So really our remit is to look at anything that has the potential to improve healthcare, quality of life, or the environment around us. So that spans biotech, materials, AI, robotics, as I've talked about. We do tend to skew quite heavily towards life sciences, owing to our backgrounds. Our first two investments are in that space, but that's certainly no excluding factor. If you've got something that's got a genuine technological innovation, we'll always be keen to look, and we are trying increasingly to be quick, to be honest, if we're not the right people to take that forwards. And so part of our aim of how we spot the great companies is we put a really strong focus on technical due diligence and seeking technical excellence, because often complex companies need championing at the early stage, particularly when there's ideas of high complexity behind them. And I think part of the transition that a lot of companies go through in that first 3-year window is to go from repeatable science to reproducible science. That's something we know really well. So we sort of use the heuristic that repeatable science is the same person on a different day, and reproducible science is something that can be done in a different lab in a different country by a different person more than 3 times. And we want to see more of that, because that's the underpinning of great therapies, diagnostics, and disruptive technology. So Brian, if you skip on, I'll just talk a little bit about how we curate that value and then introduce the team and wrap up. So part of how we aim to create value is to sort of work and mentor with the leadership teams. Every one of our core team has been a founder. We have set up and run our own companies and continue to do so. We've been chief technical, science, executive and financial officers. And we do think that there is not an overabundance of really strong talent to run and mentor these companies. And where it is, it tends to be quite siloed. So we're really trying our best to kind of join up networks that have been typically quite disparate, which is why we're keen to work with other funds to syndicate. So, you know, Foresight Williams is a great example of a fund that's got such a clear remit in terms of how it leverages technical and engineering expertise, or Ada Ventures' previous track record in working with in areas that previously haven't attracted great investor focus. And so, you know, we're trying to link up those networks and be a value add in those types of rounds. So if I just briefly talk about the team quickly, I'll just flash you some bios. So hopefully the majority of you would have come across Dr. Harry Desicra, who's our co-founding general partner. So Harry is a chemist, self-confessed nerd, as am I, and he really sort of put Bristol on the map with his work at Xylo. And the exit to biopharma has been great for the ecosystem. And to his great credit, he has invested very broadly back into that ecosystem and given his time very readily. And as you sort of mentioned, Brian, my background was in academia for a number of years, in Bristol for 9, bouncing between the departments, and then up in Oxford, where we started our company with Professor Hagan Bailey. I've also helped found a consultancy that sort of provides technical experts and mentorship, and worked at Entrepreneur First for a turn of that cycle. And again, I think mentoring companies and sort of growing that ecosystem is something that I've sort of tried to take with me with every step of the way. If I can jump on and stop talking about myself, we're also really lucky to have John Creighton, who's sort of a pillar of the deep tech ecosystem in the Bristol and Bath region, I would say in the UK, but his work with Kramer and Zinstra and as an early stage investor into Creo and others, I think John's enterprise value as an individual outcompetes a lot of funds under about 10 years old. And so, you know, his impact in the ecosystem is massive, and having him as a chairman has been incredible. And we're also really lucky to have Emma Tinsley as one of our advisors. In Emma's day job, she's the CEO of Weatherden, which is a clinical design consultancy. They design and run clinical trials for a number of biotech companies and pharma companies. But she has a background in audit from KPMG and also led some company creation activity at SV Health Investors, Kate Bingham and Houman Ashrafian's fund up in London. And so Emma's got a fantastic background that has helped us build robust models for pricing and investment into our sector. We have a growing team. I'd be remiss not to mention Catherine, who's in the last photo. So I'll just name check Catherine on the last slide. Catherine and a growing number of people that are joining our team, and we couldn't do it without them. So I'd be delighted to welcome any questions or talk a bit more about what we're doing. But I think I'll probably pause there.
Great, thank you so much. Perfect, great timing too. So interesting to hear it all laid out. It's interesting, isn't it, when you kind of see things growing in the ecosystem but don't necessarily know the narrative. So really great to hear that, and I'm sure it's been really valuable for others as well who know of you and those who don't. So I shall open and invite everyone to submit some questions via the chat or the Q&A. I'll keep an eye on both this time if there's anything that you want to ask Sam. My first question was one that's more, I guess, logistical and a little bit about, I guess, your investment thesis to an extent, but how much is there an overlap between companies that are within the space in the incubator versus those that you're investing in, and have you got ambitions and expectations about that?
Yeah, that's a great place to start, and it's one we've got asked quite a lot when we're fundraising as well. I think naturally companies that we know well have ended up being a large part of our pipeline, whether it's through the Bristol incubators, through my links to Oxford and Bristol, or Emma's links into London. I think with the best intentions in the world, given the size of our fund and the number of deals we could do, I think we could only do about 1/10 of all of the companies in that space, even if we invested in everything. So I think that's part of the reason why we were keen to syndicate, try and raise this sort of the profile of the Bristol companies. And by and large, even if we're not the right investor, increasingly we are trying to make introductions to other funds that would be better suited. And where we can, we always champion really strong technology, which is probably a roundabout way of saying, yes, we do invest in companies in the incubators. So Cytoseek and Carbonmetrics are both there, but it's not a prerequisite or requirement. If you're a UK-based company and you do something that is either in the life sciences or overlaps with deep technology, we'll be interested. And we're increasingly looking further and further afield, and working with other funds actually who are bringing us opportunities from all over the UK.
Great. Yeah, that's an interesting. So it raises a question for me around the kind of Bristol focus in terms of the language in some of your marketing, which is, I think, relates to what Matt was saying about our regional brand and how much that is a kind of emphasis, really. It doesn't sound like it's a kind of geographic focus necessarily in terms of the investments, but just more the home of Science Creates. Is that fair to say?
Yeah, 100%. And I think actually one of the things that I was trying to do with the links that I had in Oxford and London was just to get more people down to Bristol to care and show an interest. I think there's strong economic drivers. I think it is a very smart move basing a company in Bristol. Overheads are cheaper relative to Oxbridge. You've got a huge pool of domestic talent that comes out of the great universities. So, you know, having your money go 30% further is a strong economic driver, and that tends to be what I lead with when I'm marketing Bristol. I think we sort of have a very open and collaborative ecosystem, actually, all things considered. I think the universities, both universities of Bristol tend to be very easy places to find experts, expertise, know-how, access to equipment, and that's not necessarily echoed across the UK. So I think, yeah, we find it easy to do work in Bristol, but we didn't want that to be preclude us sort of looking for great companies and supporting them. And I think our role in the ecosystem does go a little bit above and beyond the deals that we do, in terms of how we sort of encourage others to take it seriously, because I think it's gone from almost nothing to being sixth in the UK rankings for sort of spin out and startup. So I mean, that is an incredible jump, and we can't claim. I certainly can't claim a hand in driving that, but I think others in our team certainly had a catalytic effect on it.
Absolutely, absolutely. I was reviewing some scale-up data actually earlier this week, and one of the stats was that 1 in 2 of the official scale-up companies would like to do more with the universities. And I think you're right. I think those kind of open doors are so important in helping that development of the R&D that's kind of has so much potential within existing businesses as well as the new ones that are coming through as well in the ecosystem. I have one last question, which is slightly tangential, but as you're here, I have to ask. So the syndicate, the Science Angel Syndicate, which Ben and Jonathan have put together, is that in any way related to Ventures and Science Creates, or is it entirely separate?
No, I was actually speaking to Jonathan yesterday in the last 2 days at BioTrinity. So no, Jonathan was a part of the founding team of Xylo and has been an angel investor in the ecosystem, but that's a distinct entity that's been set up by him and Ben Miles. And as I was sort of alluding to earlier, even with the best will in the world, we're a new fund and a small team. So I think having other pools of capital like Jerry and the team at BPEC and the Newable and their partnership and Jonathan and the existing angels of the ecosystem is only going to drive up the opportunity, and I think something we're really delighted to see. Yeah. And you know, seeing other funds like Ada opening offices down in Bristol, and many of the others that we've been working with. So I think not formally attached, but certainly friends, I would say.
Great, good to know, good to know. Thank you. Super. All right, well, I will let you leave the stage, and I shall round off the event by sharing a few statistics about who's raising and who's been successful in raising. But thank you ever so much, Sam, for contributing and being involved today. Really appreciate it. Fab. Hit that mute button. We can still hear a mouse scraping, I think. Oh. So close. Marvellous. So that leaves it to me. I've got 12 minutes to run through just the final bits of information about who has been successful or who is actually actively raising and what does the scene look like in the Southwest at the moment. So the next set of slides that I'm going to look at here are focused on the west of England. So that is Bristol, Bath, North Somerset and South Gloucestershire by my definition. And the 499 companies that have received equity investment and met with Bohurst triggers in the last quarter. So I was looking at data from all the way through, actually, from the kind of history of Bohurst, and they use 8 triggers here. As you can see, so a company may have been on a high growth list or perhaps received some venture debt or equity investment, and that will mean that they will then be tracked within the Bohurst system, and gives us a kind of data set to be able to give you some interesting insights into what is going on across the board. So Bohurst offers us this quick summary. So of those 499, just 70 of those companies are reporting full financials, which could be voluntary or it could be because they meet the HMRC triggers. Either way, that's a relatively small proportion and suggests that there's quite a long tail of smaller companies, perhaps, as is indicated by their estimated average number of employees, which is just 35, even though there are 16,000, nearly 17,000 estimated total employees across those nearly 500 businesses. In terms of the total amount raised, so this is our kind of, I don't know, I like to call them the poster children, but perhaps it's just the kind of top winners when it comes to equity investment in the region. It'll be no surprise to you that GraphCore remains at the top of the graph, but there have been a couple of changes within it since the last quarter, which I've tried to indicate on this slide rather primitively, but it gives you a flavour. So the new ones on there, you'll see that Simba Sleep has disappeared, and that's because Bohurst updated their registered office to London. I don't know if they were in Bristol, I don't know, but they just appeared briefly on our data, so they vanished. And then Oxis are new for Q2. You can see they've raised 90.8 million. So they were registered as a business in 2000, but have moved their registered office to Bristol recently. Bohurst also identifies them as a zombie, which suggests that they haven't had any kind of significant changes recently, but obviously have raised some pretty impressive capital in the past. So one to watch perhaps and find out a bit more about in my brief for the next quarter anyway. And then the other newbie on there is ClearBank, who we haven't seen before. They're a company, a fintech company that were registered in 2015 or incorporated in 2015, and they were previously registered in London until June. So they've moved their HQ down here, which is exciting for us and our obviously growing fintech community. So a new community member there, which is great. In terms of sectors, I was commenting on this actually with Sam a little earlier. You'll remember, those of you who've been before, that usually we see a very tight top two in terms of the technology and IP-based businesses and business and professional services. Usually those percentages are different by about less than a percentage point, let's put it that way. And you can see that technology and IP-based businesses have suddenly gone streaks ahead, which in part could be to do with additional companies joining our, hitting the triggers, essentially. So the companies that have been here a long time but have just met a particular Bohurst trigger, but also I'd like to think that it's to do with some of the fantastic stuff that's going on, and particularly the leadership that Science Creates are showing within that space, and the activities at Set Squared and other friends like Future Space locally as well. Top funders by number of fundraisings, there's not been a significant change to this, so we still see the crowd funders at the top of the list there. Bristol Private Equity Club, hot on their heels with 25 deals, and Webstart no longer active, but still there with hanging on with 18. I feel like I might be doing the top 40 music right now, but no significant changes there. In terms of funders by value of fundraising, again, very similar to what you saw last quarter. Draper Esprit has the most money invested in companies in our region, swiftly followed by Amadeus Capital Partners. I think, as you will know, there's a lot of overlap in their investments in terms of who they're invested in. And I do encourage you to join us for the next quarterly investment briefing, which will be taking place on Thursday, the 23rd of September at 12:30. Our theme will be around people-powered investment, so a particular focus on those people who make the investments happen, but also around diversity and inclusion. So I've got a couple of interesting speakers already lined up, and I'll be sharing those very soon. I hope you've enjoyed the session today. If you've got any feedback, please do get in touch. I'd love to know more about what you made of the event and how you think we can make it better, because we will be running another one very soon. But have a fab afternoon, and thanks so much for joining me.